This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you are not ahead, you are under. It is Tuesday morning, 26th of May, 2026, and if you went to sleep thinking the commodity squeeze would last forever, you just woke up to a massive macro shock. The physical bottlenecks are seeing their first real cracks, and the paper markets are throwing an absolute rager. Let us get you caught up for the trading day ahead. First up, the 60-second commodities and crypto flash. Brent has crashed below $100. In a staggering reversal, Brent crude plummeted over 5.5% in yesterday's session, slamming down to $97.76 per barrel. This breaks a major multi-week streak above triple digits as algorithmic shorts get squeezed on a sudden geopolitical shift. What caused the oil bloodbath? The Iran diplomacy breakthrough. Headlines are swirling that back-channel negotiations regarding the Strait of Hormuz blockades have made progress. Traders are aggressively pricing out the geopolitical risk premium. This sparked a massive global equity relief rally. Net energy importing markets went completely vertical yesterday, led by India's Sensex exploding over 900 points. Massive broad-based buying in heavyweights like HDFC and ICICI Bank shows capital is eagerly fleeing defensive sectors to hunt for growth. Alongside the equity surge, the Indian Rupee pulled off a massive defensive victory, appreciating heavily to open at 95.20 against the US dollar. Finally, Bitcoin digests the Clarity Act milestone. Bitcoin has slipped slightly below its recent highs, consolidating around $77,300. As liquidity temporarily rotates back into traditional risk assets. But the real story is structural. The U.S. Senate Banking Committee just advanced the CLARITY Act by a 15-9 vote, establishing clear rules to finally segregate crypto securities from commodities. Let us take a deep dive into the sudden easing of the oil crisis and the institutional green light triggered by the Senate's new framework. The market shifted gears over the last 24 hours. We have transitioned from blind panic to a highly reactive, headline-driven environment. Consider the de-escalation mirage versus physical supply. Yesterday's 5.5% drop in Brent crude proves how sentiment-driven paper oil has become. The promise of a diplomatic breakthrough is an excellent short-term relief valve, but savvy macro traders are still looking at the physical data. Even if negotiations progress smoothly, the physical backlog of container ships and tankers around the choke points will take weeks to normalize. This is a classic buy the rumor setup. If the back-channel talks hit a snag later this week, that sub-$100 oil floor will instantly turn into a launch pad. Look at the great equities rotation, the massive 900-point pop on the Sensex, and the global jump in financial and auto stocks tell us where money wants to be. For the past month, capital was choked in defensive positions and commodities hoarding. The moment oil ticked under $100, money flooded back. Money flooded back into rate-sensitive cyclical sectors. Banking stocks are leading the charge because a stronger domestic currency reduces inflation risks. Now, do not be distracted by Bitcoin's minor consolidation at $77,000. The advancement of the CLARITY Act is a structural watershed moment. By creating a definitive legislative map, Congress is systematically eliminating regulatory gridlock. This is the clarity sovereign wealth funds have spent years waiting for. Here is the TradeFlow take. The drop below $100 oil is an incredible gift for equity bulls today, but do not mistake a headline for a permanent fix. Capitalize on the equity momentum in banking and cyclical stocks right now, and keep your macro hedges intact. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.